Good morning. I'm Dr. Wilson Pearl, Associate Professor, Department of Corporate Secretaryship of KCS Kasaragod College of Arts and Science. Redemption of authorized capital. Now, we'll go to the next slide. There are two tabular columns shown here. The one which is the previous one is a revenue reserve. The right hand side is a capital profits, which means I told you the certain amount to be transferred to the capital redemption reserve. So these are the reserves where the first column shows you these are the available reserves to be transferred to capital redemption reserve. The second column shows these are the reserves that cannot be utilized for transferring to CRR, that is capital redemption reserve. This one is the first one. The first column shows the availability of the reserves to transfer to CRR. The second column shows the non-availability, which means the second column which is given here, the reserves that is shown in the second column will not be utilized to transfer to CRR. The first column indicates that these are the reserves which can be used to transfer from these reserves to CRR. Okay. The second column indicates these are the reserves which cannot be utilized to transfer to CRR. Okay. You have to memorize this. Okay. Then next one. We'll go to the next page. Now we'll look at the journal entries now. Before going to the journal entries, the formula for CRR is given here. The CRR is nothing but capital redemption reserve. This capital redemption reserve is calculated in the following manner, which is shown at the top of the slide. That is redeemable preference share capital minus fresh issue of equity shares. Okay. The redeemable preference share capital which will not include any premium. Okay. The amount which is written here in this formula will not include any premium of redemption. Then fresh issue also will not include any premium on fresh issue. So which means excluding the premium of redemption, excluding the premium of fresh issue. So only the real value will be taken here. Okay. So that is the formula. In other words, CRR is equal to redeemable preference shares minus fresh issue. That's it. That's the formula. Okay. Now we'll go to the journal entries. We will see how many entries. Somewhere around 9 to 10 entries are there in this chapter. Okay. And the entries that I gave you, that is to be explained here, should be memorized in the same order. You cannot change the order. So only follow strictly one particular order. So you will remember which entry will be there, which entry will not be there in a particular sum. Only then it will be easy for you to identify. So if you go in a strict order, which is followed by me, if you follow this order, you will easily work out the sums. Okay. The first entry what I gave you is only for the purpose of converting partly paid up preference shares to fully paid up preference shares, because the basic condition is that if there is any partly paid up preference share, you cannot redeem those shares. So you should convert them to fully paid up. Only then you can make the redemption. Okay, that is the first entry. That is bank account data to redeemable preference share capital account. That is the first entry. This entry is applicable only if there is any partly paid up preference shares is there. If the sum says that the preference shares which is given in the balance sheet is fully paid, then this entry is not required. Okay. The next one, for sale of assets. If there's any assets sold during the process of the redemption, then that entry will be this bank account data, P&L account data to investment to P&L. Okay, normally they'll sell only the investment, not any other assets. They'll normally 90% they'll sell only the investments here. Okay, for the purpose of redemption. Then here there's a P&L and the debit, and there's a P&L and the credit. The debit P&L indicates it is a loss. The credit P&L indicates it is a profit. Okay, if you sell an asset in a profit, so when you sell any asset, there will be some profit or loss. Either you will get profit, or you may get loss. Okay, sometimes it may be the face value itself. You won't get both. Okay, if it is any profit, you won't get a loss. If there's any loss, you won't get a profit. That's it. So any one P&L will be there. The debit is nothing but your loss. The credit P&L is nothing but your profit. Okay, for example, the investment is worth 10,000. I sold the investment for 11,000. So the bank will show you 11,000. To investment will be 10,000. To P&L will be 1,000. So which means P&L on the debit will not be there. Okay. Then for fresh issue of equity shares, for the purpose of redemption, if the company decided to make any fresh issue, in that case bank account data to equity share capital. If the fresh issue is made at discount, the discount will be on the debit. If the same fresh issue is made at a premium, the premium will be there. So which means here again, you might have discount or premium. Any one can be there. Or it can be at face value also. Okay. Next, we'll go to the next slide. Then fourth entry, for transferring redeemable preference share capital to redeemable preference shareholders. This entry will be there for every sum. Okay. Without this entry, you can't do the sum. Okay. The basic entry is this: redeemable preference share capital account data, premium redemption account data to redeemable preference shareholders is nothing but transfer entry. Okay. So this entry is nothing but your transfer entry. Okay. So for example, I'll take an example here. We assume the redeemable preference shares is 5 lakh. Then this preference share is going to be redeemed at 10% premium. So on the debit, you'll write of the first entry, in this entry, in the first line, you'll write 5 lakh. Then on the premium on the redemption, you will write 10% of 5 lakh is nothing but 50,000. Both put together, it will be 5 lakh 50,000. So that's how you write the fourth entry. Then since the premium is there on redemption, I'll repeat again, since the premium is there on redemption, then you'll have the fifth entry. Suppose if the preference share are redeemed at par, which means there's no extra money is paid to them. Premium, you already know it is a premium, but discount. Premium means extra money is paid. Discount means lesser money is paid. So the problem, if the problem says it is redeemed at a premium, then you'll have this fifth entry. If not, you won't have this fifth entry. For transferring the premium redemption, you will give priority first to the security premium. So if there's any fund, for example, like what I gave you here is the preference shares redeemed at 10% premium, and the preference share value is 5 lakh. Out of 5 lakh, 10% will give me 50,000. Okay, and the problem says the security premium in the balance sheet shows there is 40,000 amount rupees is there in the security premium account. So, but I need 50,000. Therefore, I give first priority to the security premium and take 40,000. Then for the shortage of 10,000, because I need 50,000, I'll go to the P&L and check the money and take from there. Okay, if P&L is also not there, then you have to go to the next option is general reserve. Okay, so that is it. So security premium account data, P&L account data to premium redemption. So that will be the fifth entry. Then sixth entry, CRR. CRR is nothing but the transfer. Okay, if it is redeemed out of profit, the whole amount of preference share will be transferred to CRR. For that, suppose if the 5 lakh is the redeemable preference shares and there is no fresh issue. The formula, I told you the first formula, isn't it? Redeemable preference share capital is 5 lakh, fresh issue is 0. In that case, so 5 lakh minus 0 will give you what? It is 5 lakh. Therefore, the CRR is 5 lakh. In that case, if you look at the balance sheet, if the general reserve shows you 3 lakh and P&L shows you 10 lakh, okay, we need how much is the money needed for transferring to CRR is only 5 lakh. So I'll take 3 lakh from general reserve. Out of 10 lakh, I'll take only 2 lakh from P&L. So the rest of the thing, reserve fund, workman compensation, workman accident income fund, debenture redemption reserve is not needed. So with these two itself, I can transfer the whole money which is required. Okay. Then suppose at the time of redemption, the balance sheet, if you look at the balance sheet, you will have bank balance and cash balance. Suppose if the bank balance is only 4 lakh. And if you are going to redeem the preference shares, which is worth 5 lakh 50,000 at a premium also. 5 lakh is the redeemable preference share, and you are going to pay extra money of 10%, which gives you 50,000, which means in total you are going to pay 5 lakh 50,000 for the redemption of preference shares. I look at the balance sheet. When I look at the balance sheet, suppose if the balance sheet is given, I look at the balance sheet. When I look at the balance sheet, I'll check for the bank balance and cash balance. Suppose if the bank balance and cash balance put together, I get only 4 lakh. But I need 5 lakh 50 to repay them. Okay, then I'll come to a conclusion. If there's a shortage of fund, I have to make bank loan or bank overdraft arrangement. I borrow, which means I borrow, in this case, I borrow 1,50,000 from the bank to settle the redeemable preference shareholders. Okay, if the balance sheet says cash and bank balance is more than 5,50,000, then there is no need for the seventh entry. Okay, you got it clear? If the bank balance is sufficient to pay the redeemable preference shares with the premium, then there is no need to write the seventh entry. Okay, now we'll go to the next entry now. Eighth entry, for settlement of redeemable preference shareholders. Redeemable preference shareholder account data to bank, that is 5,50,000. If it is there, then for settlement of debenture holder, sometimes they may redeem both preference shares and redemption debentures together. So for debenture, you will directly transfer to debenture to bank. Okay, then bonus, if there's any bonus issue, made to equity shareholders, then you will pass these two entry. The first entry is for issue of bonus shares. The second entry for issue of bonus shares. The first entry is for declaration of bonus, not for normally for issue of bonus shares. The first entry will be declaration of bonus. The second entry will be for issue of bonus. Okay. Then for declaration you will write CRR, P&L, general reserve, and P&L to bonus to shareholders. Then for issue of shares, you will write bonus to shareholders to equity share capital, whatever that is issued. Okay. So this is all about your entries. Now we will take one sum now. Please memorize the journal entries before working out the sum in the same order that I gave you. Okay. And I'll explain the same order when I work out the sums in your Google Meet class. Okay. I'll explain the same order only. I won't shuffle the order. So only memorize only when you memorize these entries, you'll be able to follow me then with the heading. Okay. You won't memorize only journal entry. You memorize also the heading which is given there. Okay. Next. Now we'll see one sum now. Syscom Limited issued 75,000 equity share of rupees 10 each and 5,000 redeemable preference share of rupees 100 each. All shares are being fully called up and paid up. Okay, this line is given only for the purpose of saying the preference shares is fully paid up, not only partly paid up. Okay, the line preference share, all the shares are being called and paid up on 31st. So which means there is no partly paid. It is only fully paid. So which means you don't need the first entry. Then what is the second entry? Second entry is nothing but your sale of asset. Look at the sum. Read the sum and find if there is any sale of asset given in the sum. No, which means the second entry is not required. Then the third entry. The third entry is nothing but for fresh issue of equity share. Look at the sum. If there is any fresh issue of equity share made after 31st March 1992, before that is the old one. Don't worry about the before one. On the date of redemption, at the time of redemption, is there any preference shares? If there's any equity shares issued to shareholders? No, there's no equity shares issued. Okay, the fresh issue is not also there. Then directly you will go to the fourth entry. What is the fourth entry that I gave you? For transferring redeemable preference share capital to preference shareholders. Okay. So what is the preference share value given here is 5,000 into 100 each. What is the preference share value? 5,000 into 100 will give you 5 lakh. Which means you will write 5 lakh. And if you read the last line, these existing preference, redeem the existing preference shares at 105. Okay. Which means 100 rupees, now they are paying 105, extra 5 rupees more. Which means the preference shares are redeemed at premium of 5 rupees. They're paying extra money. Okay. And the problem says in your balance sheet, the P&L account shows undistributed profit of 3 lakh and general reserve shows 2,50,000. Okay. Now we'll go to the sum. The next page. P&L and general reserve. Therefore, you can't write this security premium account debtor. So this will be raised off. Then premium redemption is 25,000. Okay. So the security premium, you have the zero balance will be there, the security premium. Then for transferring to CRR. For transferring to CRR, you have to find what is the value which is there available. The problem says the general reserve have so much money. So we need only 5 lakh to transfer. So general reserve 2,50,000, P&L 2,50,000, the total is 5 lakh. Reserve fund is not required. Okay. Then for settlement of preference shareholders. Since the next one is a bank loan, a bank overdraft. Since the balance sheet is not given here, in the sum you do have any balance sheet, so we don't know what is the bank balance and cash balance available in the balance sheet. So if it is not there, you are not given a balance sheet. So find out what is the bank balance and cash balance. Then we assume that there is sufficient money is there in the bank to pay this 5,25,000. So there is no need to pass a 7th entry. Directly you go to the 8th entry. Redeemable preference shareholders account to bank, that is 5,25,000. Okay. Now. So that's all about your illustration number 1. We'll go to illustration number 2 now. Now we'll do an exercise sum now. That is exercise number 13. The extract is given here. Equity share is so much, 20 lakh. The preference share is 20 lakh. Capital reserve available in the balance sheet is 10 lakh. The general reserve available in the balance sheet is 6 lakh. And the P&L available in the sum is 17 lakh. The company exercises its option to redeem the preference shares on 1st January 2010. Okay. Now, we'll go by the order of the journal entry that I gave you. The first entry is only for the purpose of transferring, converting partly paid up preference shares to fully paid up preference share. Look at the sum. Here in the sum, there is no partly paid up. The preference share value is only 10. it is fully paid. Now if nothing is given, you assume it is fully paid. Okay, then first entry will not be there. Then second entry, what is the second entry? A sale of asset. Look at the, read the sum and find if there's any sale which is given there in the sum. No, there's no sentence saying that you sold some investment, sold some fixed asset. Nothing is there. Therefore, second entry is not there. Third entry, you made a fresh issue. Do the problem say anywhere the fresh issue of equity share is given? No. So that is also not there. The first three entries will not be there in this particular sum. Exercise number 13. Then directly we'll go to the fourth entry. Fourth entry will be redeemable preference share capital account at R. Okay, and read the sum and find there is no premium at all. Okay, even though if there is no premium, you write, let that be in your memory. So what do you write? Redeemable preference share capital account at R, premium or redemption account at R to redeemable preference share holders, which means for redeemable preference share capital, you will write 20 lakhs. For premium or redemption, you will write dash because there is no premium or redemption in given the sum. Nowhere the problem says the preference shares are redeemed at premium. Therefore, it is a dash. Then to redeemable preference share holders, it is same 20 lakh. Okay. Then what is the fifth entry? Fifth entry says transferring premium or redemption. Since there is no premium or redemption, therefore the transferring entry will also not be there. Then next one, for CRR. I told you what is the formula for CRR in the first itself. CRR is redeemable preference share minus fresh issue. Since the problem is silent with regard to fresh issue, which means there is no fresh issue at all, which means it is 0. So 20 lakh minus 0 will give me 20 lakh. So which means I have to transfer 20 lakh to CRR from the general reserve and next priority to P&L. When I go through the general reserve, there is only 6 lakh. We need only 20 lakhs. We need 20 lakh, but the availability of general reserve is only 6 lakh. Therefore, we'll take another 14 lakh from the P&L, which means the entry will be general reserve account data 6 lakh, P&L account data 14 lakh, to CRR is 20 lakh. Okay. Then the next entry will be your bank loan or bank overdraft. Even I told you the earlier sum itself. When there is balance sheet given, only then you can make out whether you need a bank loan or bank overdraft. Since the balance sheet is not given, therefore we assume the sufficient money is there with the company. Therefore, the redemption will be carried out smoothly. No need to arrange bank loan or bank OD. Okay, the last entry, redeemable preference shareholders to bank the same 20 lakh. Okay, now we'll go to the next sum now. So the answer, you can see the answer which is there for this one, 20 lakh. So premium redemption is not there. Even though it is not there, I wrote and just I've written dash over there. For transferring to CRR, I told you 6 lakh from general reserve, P&L 14 lakh. Reserve fund is no need there. You can put a dash, 20 lakh. The redeemable preference shareholders to bank 20 lakh. Okay, next sum.